Welcome back. Well, as we are taping this on Friday, May the 6th, we are actually also, as we tape, watching the NASDAQ down another 2.5%. And Dan, I was saying during our little break that, some of your reports, I love your wording. And, you call it the Rubik's Cube in terms of dealing with all the different factors here, a wall of worry, risk off, dark cloud for tech. There's a lot to kind of digest here for investors. And I want to actually ask you, what are you actually seeing in terms of the institutional investor flow? Because sometimes you'll see markets sell off and maybe it's just ETFs, cash flow to that. It's not the long only guys or the hedge fund guys that are actually, selling off their positions, but they probably are if they've got some leverage on their books.
Yeah. To just keep with the metaphors, this feels like that video Thriller from Michael Jackson, Nightmare on Elm Street. That's the best way I could kind of explain where we are today because, look, flows are obviously have been a disaster. You're seeing redemptions, leveraging come off of the system. And especially when it comes to tech, tech has ultimately been the big bet over the last decade. So now it goes back to, okay, Shopify was 1,600 at the height of the pandemic. Now it's 400. Before the pandemic, it was 400. Does that mean it goes down to 300? Well, what's the price? What's the valuation? So I think right now you're going to see stocks way oversold. I personally believe this is a capitulation. If I look at technically decliners to advancers, the amount of decliners in a given day to advancers, it was 94% yesterday. So once you start to reach those levels, those are capitulation type of numbers, which is important because markets like this for the average investor, they're downright scary. They're scary for the professionals.
Right. But when you take a look at the earnings picture from some of these companies, what stands out on the strong side? Let's start with the positives.
Well, the positives are the enterprise is holding up Rock of Gibraltar like. If I look at software, cloud, look at Microsoft, you look at the cloud numbers from Google, Amazon, even IBM across the board. I think Adobe strong, Oracle, and then ultimately when you look at areas like cybersecurity, that's not going away in terms of needing to protect it. I think names like a Zscaler, names like a Palo Alto, among others. Semis have been strong. AMD was strong across the board. I think you had also strength that you saw in Apple, but of course you got the supply chain and you got the zero COVID issues in China. And that's why you have to parse some of that out in terms of near-term versus long-term type of issues.
And for a name like Apple, though, even though we are concerned about China and China slowing down because of the COVID and increased restrictions, that's not a name that you would worry about. What is your long-term thesis on Apple?
Demand's outstripping supply by 15%. So that's one where we don't focus much on the supply issues that will get smoothed out. It's on overall demand. I look at Apple as one where the services is alone an $80 billion revenue stream. I think services business alone is worth $1 trillion plus. So I think so that's why in names and periods like this, it's in panicky periods, it's Apple we'd be buying, Microsoft, Google, we'd be buying cybersecurity names. I think there's oversold names, even like Snowflake, Datadog on the cloud side, Salesforce.com. And I think that's sort of the way to navigate in terms of quality tech that also can withstand any type of softness in the economy.
How do you, speaking of softness in the economy, how do you explain Amazon's results?
E-commerce was a massive pull forward. What you're seeing is more of a normalization. A Catherine or a Dan now is not necessarily buying as much on Amazon. They're starting to go to the mall. Now, that's not for me. I'm probably buying more on Amazon today than I was even at the height of the pandemic. But I think it just speaks to those are some of the trends that are normalizing. Expenses have increased. They're able to pass that to the consumer. But then you look at the cloud piece for Amazon. That's massive. I think that's a big part of the sum of the parts valuation. That could be worth $900 to $1,000 alone in terms of that sum of the parts.
Is Amazon a buy here then?
I think Amazon's a buy because of that cloud story. And ultimately, what I view as kind of clearing the deck type of guidance that was probably overly conservative that they gave, during earnings season.
Okay. All right. We're going to take a quick break. When we come back, I do want to get your thoughts on Elon Musk and his purchase of Twitter and also Tesla. We'll be right back.